Welcome to Kenton Teaches. Enjoy the video.
You begin by confirming KYC and enabling 2FA, security matters. Next, fund your wallet with UST or BTC so the bot can trade immediately. Once done, pick a bot type, spot grid for range markets or DCA for trending moves because each manages orders differently. Make a small test allocation, for example $50 to $500, to validate behavior. Also, link API keys only if needed and restrict permissions. This reduces attack surface and keeps trades controlled. You now configure the strategy details. Start by selecting the trading pair and define grid levels or DCA intervals based on recent volatility. This controls entry frequency. Then set position size and risk limits, decide a max drawdown percent and a stop loss so one event doesn't wipe you out. Make sure to choose order type, slippage tolerance, and leverage appropriately. Higher leverage speeds returns and risk. As you adjust, monitor the projected P and L and order cadence to match your risk profile. You launch the bot in demo or live and immediately confirm initial orders are placed and filled. That verifies settings. After launch, monitor performance and rebalance capital weekly, adjusting grid range or DCA spacing as market structure shifts. If something goes wrong, pause the bot and inspect logs, verify API keys, exchange price feed, and network connectivity. If orders failed due to slippage or liquidity, reduce order size or widen grid spacing. Finally, document change.
Thanks for watching. Please subscribe if this video was helpful.